Okay, everybody, here we go. It is me, Gregory Mannarino. Still, Wednesday, November 9th, 2022. This is my post-market wrap-up, and what a day. Stocks got hammered across the board. Cryptocurrencies getting crucified. This Binance deal kind of fell apart. It's playing into that. There's all kinds of uncertainty going on, and there may be a little more to this than meets the eye. I want to cover some of that. Let's start off with the stock market. As I said, a pretty significant sell-off across the board. Now, there's a lot of talk. There's a lot of speculation as to what's driving this. Is it really the midterm election results or lack of, or wherever it's going here? Of course, to a certain degree that is playing into it. But I think it goes beyond that. What am I talking about? Tomorrow, we're going to get a key inflation piece of information, however they want to twist this, and the market is anticipating that it may not be too good. In the event, hold on a moment here, that this number floated out happens to be better than expected with regard to inflation, well, of course, the market's going to love it, and we'll probably recover everything and then some that we lost today. So, look, yes, I believe that the midterm results are weighing on the market now, and we'll see how that plays out. But I think, and look, I'm just telling you what I think. Could I be wrong? Absolutely, but I'm just telling you what I think, and I want to hear from you. Again, we got this report tomorrow. It's big. The market's anticipating this, and look, the story for many months has been, okay, the Fed's going to raise rates. The central banks, the European Central Bank, they're going to raise rates, and it's really going to fix inflation because, it's a rate problem. No, it's been a lie since get-go, since freaking day one here. It just makes me laugh because right here on this blog, you and I talked face-to-face like we are right now. And we said it would not work. The Fed can raise rates wherever they want to. It's not going to make a difference because it's not a rate problem. It's a currency issue. You know it. I know it. And let me enlighten you a little bit in case you maybe have some kind of doubt in your mind. Now everybody knows it. It's a currency problem. It's a currency free fall. It's a money supply issue. But we're not hearing a thing about that at all. Zero. As a matter of fact, hold on a moment. The silence, to me, from the mainstream propaganda ministry is deafening. Never will they bring that up to you. You see, because then maybe people's brains would engage a little bit. Hold on a minute. You mean central banks have been raising rates month after month after month after month? Inflation has gone up and up and up and up and up. Well, that's not working. So maybe the problem lies elsewhere. Duh. You see, these duhs, they just fly out of my mouth. It's just like it's weird. But this, again, they'll never tell you, never ever will you have the mainstream propaganda tell you that it's not a rate problem. It is a currency problem. We knew that, you and I, for I don't know how long now. But again, no one will talk about it. I wonder, honestly, those of you out here who follow other blogs like this, is anyone else talking about how this is a currency issue? It's a currency free fall on a global level, and central banks are doing nothing to stop it. As a matter of fact, they're fueling it. Central banks continue to inflate, and you know better than anybody else on this freaking planet Earth or off the planet Earth that this is their end game, to continue to inflate and then inflate and then inflate some more, meanwhile telling you some other tale out of the other side of their mouth how this is a rate problem, and they've got, I guess, people convinced of that. Look, it's not working, duh, we all know that, duh, and how about we take another pathway? Oh, there is no other one? You see, that's what they won't allow people to know. Imagine, for example, we had I don't know, pick someone with a big, huge voice out here. I don't know who. A lot bigger than Greg Mannarino with his 236,000 subscribers to actually say, hold on a second, this is not a rate problem. It's a currency problem. And central banks, again, they have no interest at all in stabilizing their currency or stopping the free fall. But anyway, you know all this. So, as I said here in the beginning, this is probably twofold what we witnessed today. And you know, with cryptocurrencies falling off a cliff like that, that's obviously fear. I think it's panic selling there in the crypto market. Bitcoin around 17,000 or even less than that right now. But everything sold off today. Gold and silver fell under pressure. Crude oil got hit. It was a pan sell-off because of, panic. Usually you generally see this with that knee-jerk reaction into the freaking US dollar. And no surprise to anyone that follows this blog. That, people, mark my words on this, the fact that we continue to see the relative dollar strength climb here is a big tell that there is a serious underlying problem, and no one's talking about it. It's the debt market hyperbubble. It's instability in the debt market, period, the end. Although the 10-year yield came down today, that could have been a safety play too. We need to see, as a matter of fact, let me explain this to you. So this is what I will be doing tomorrow. I really don't care what stock futures are going to do overnight. I really don't. When this report comes out, this inflation report, CPI, okay, when it comes out, the first thing this guy's going to do is go look at the 10-year yield. Go look at the dollar. Go look at the MMRI. What's going on here? Look, in the event here that this doesn't come in very, very good, you can expect this market to fall a lot harder. And you can expect to see the 10-year yield rise, knee-jerk into the dollar. You know the situation here. I don't know about you, but I'm kind of all giddy and excited about what they're going to do. And then we're going to need to see who they're going to float out here. Is it going to be a member of the Federal Reserve, some Fed president, some whisperer like Nick the Pig, Oink Man? Is it going to be the IMF, the World Bank, whatever they got to do? Believe me, they're working right now behind the scenes to, okay, look, this is what we're going to do. None of this is spontaneous. It's all pre-set up. And the timing of all of this is crucial moving forward. Again, nothing, one more time, are you ready? Nothing is what it appears to be. And you know the distractions. Look here. Don't look over there. Be ready for that. Be ready for anything here moving forward. So anyway, on top of all this here, I don't know what else there really is to say. We need to see, number one, how this finishes to play out with regard to the midterms. Look, the market overreacts one way or the other all the time. And does it mean that this is over, that we're going to bottom out? No, I'm not in that business. Maybe you are. I don't care about picking tops and bottoms. Believe me, I was in that business for many, many, many years. And let me tell you something. If one thing can drive you out of your freaking mind, it's trying to do that and getting beat up time after time. Yeah, sure, you're going to get it right, and you could stay on the right side of it most of the time if you constantly apply yourself, but it's very difficult. Anyway, I don't play that game no more. You all know that. In the grand scheme of things, all that matters to me, really, it's not elections. It's not election results. It's not comes out of the mouth of the Federal Reserve or some freak politician or whoever else. It's watching the debt market. It's instability here, and it's in our freaking face. My best guess here is no matter what happens, central banks are going to continue to at least attempt to foster the illusion that the debt market is stable. They're going to float out creatures like Janet Yellen. Oh, she does. I don't see a problem. But then she saw a problem. But then the problem went away. And now all of a sudden they took her. You don't see her anymore. She kind of vanished. Some kind of damage control mechanism. But the fact of the matter is, the key to this, and what you and I are going to focus. I don't care. Like, it doesn't matter. Even tomorrow with this freaking inflation number, good. Let them float out whatever they want to float out. I really don't care. I'm just going to look over at the debt market and see what is it doing. Are we getting a global sell-off again in bonds? Are rates starting to rise in an uncontrolled fashion? And how that's going to affect the stock market? You know that stock markets around the world, as a matter of fact, every freaking asset is deriving value from what's going on here in the debt market. And it's going to melt down on a scale that people are not ready for. I mean, it's going to be absolutely freaking epic. And you all know that. Anyway, no one's more ahead of the curve than you are, honestly. So tomorrow we know what to look for. And I don't know about you. Like I said, I'm going to be like all tickly, all tingly all over, waiting to see what they do, what they say, who they try to float out here, and how the debt market responds. The rest of it's going to fall in line. You understand? So boiling this whole thing down to, its driver, well, it's pretty simple to me. It really, really is. With regard to cryptocurrencies, let's see. I mean, they got hit pretty freaking hard today. It looked to me like panic selling. When you see that kind of stuff, now look, I'm not telling people they should jump in here and buy it, but generally there's a rebound. Look, we'll see. As all of you know, I've been sitting back and just watching the price action of cryptocurrencies for a long time. I want to, look, for a while, cryptos were stable. We were just hovering in a range, and then we get this. Okay, is it Binance? Is it some other thing? Let's just see how it plays out here, all right? And we'll talk about that moving forward. This guy here, as always, people, we're a team. This isn't my thing. This is our thing, Please comment. Please share the video. Get it out there. And I will see all of you in the morning. I'm looking very forward to that. I really am, especially tomorrow with this inflation number. Let's see what they do. See you tomorrow.